Time now for an in-depth look at the market news this afternoon, and for that I'm joined by Dr. Sei-wan, Professor of Economics at Ewha Womans University. Professor Kim, thank you as always for coming on.
Good afternoon, Devin.
Now we're expecting the much anticipated figure from the U.S. on first quarter GDP. That's due out Thursday U.S. time. What do you think that number will look like, and what effect might it have on the Korean economy and globally?
It is highly expected that the first quarter's U.S. GDP reports looks bad. Actually, global market expects that first quarter's U.S. economic growth will be around negative 3.5% on annual basis. So it would be biggest quarterly contraction since 2008's global financial crisis. But the second quarter will be worse because U.S. economy has been offline from early April due to coronavirus shutdowns. So we can say that in the short run, U.S. declining economy will affect Korean economy in two channels of stock market decrease and trade decrease.
Well, if we're looking at a second quarter that's even worse, some are saying the U.S. economy could take years to recover from this, depending on how you define recovery, 2 or 3 years, even longer. What's your view, Professor?
Actually, President Trump expects U.S. economy will begin its recovery by the end of second quarter of this year, because he is providing $3 trillion emergency packages, and U.S. Federal Reserve is providing liquidity unlimited. But quite a few economists and financial market participants expect that U.S. economy begins its recovery next year because it takes a longer time to develop coronavirus vaccine and to recover broken employment.
Right. Well, in the meantime, the Fed is holding its open market committee on Wednesday and Thursday. From all that's been said, though, it seems unlikely, highly unlikely, the Fed can or will lower rates to below zero. What will you be looking for in this meeting?
U.S. Fed's key interest rate is already set to 0% last month. So it doesn't look that U.S. Fed will cut key interest rate further down to negative level today. So in today's FOMC, it is important to understand Fed's intention to change interest rate in the future. With over 26 million unemployed, U.S. market has been hit very hard by COVID-19. So the market expects Fed will maintain 0% level interest rate until the end of next year.
Well, stocks on Wall Street were lower on Wednesday as we wait to get earnings from the big tech companies, the NASDAQ in particular, down by almost 1.5%. What's the story there?
U.S. market slightly decreased on Tuesday, like the representative index of S&P 500 return dropped by 0.52% in a single day. This decline was led by concerns on earnings of technology stocks like Netflix, Amazon, Facebook, and so on. And also dropping consumer sentiment of United States was another burden to market. European markets altogether increased over 1% yesterday. This is mainly due to easing social distancing by European governments.
Here in Korea, Samsung Electronics today posted earnings that beat expectations for the first quarter, net profit down by only about 3%. What was the reaction in the Korean stock market?
Samsung Electronics' first quarter sales and profit were stronger than market's expectations. And since Samsung Electronics covers more than 30% of the Kospi market value, it does have positive impact on Korean stock market. Kospi and Kosdaq both had positive movements today. Kospi increased by 0.7%, and Kosdaq increased also 0.04% today. Particularly in today's market, foreigners and domestic institutional investors, massive purchase were a driving force in today's Kospi market.
All right, Professor Kim, thank you so much for coming on and sharing your insights, and have a great weekend.
You too. Thanks.